Welcome into the Crypto Bunker podcast. Today I want to talk about Ethereum and what to expect next for Ethereum. So I actually just stumbled across something really interesting. So with Ethereum, we have seen price declines four times in this what we're looking at now, basically. So what we're looking at now from the period of basically June of 2022 to now, we have had four instances where the Ethereum volatility has come down as much as it has in the past maybe month and a half now. Usually, these periods of compressed volatility last around 4 to 8 weeks. And what I did actually was I took a screenshot of this chart with the Ethereum chart, and I told Claude AI to tell me what are the times when the volatility in Ethereum has gone down and the price has also gone down with that volatility. What happens next? And four out of four times, um, this has resulted in a major rally. So let me take you through the answer that Claude provided me. So, period one, early 2023, January to March. So the volatility dropped from 77 to 52, major compression. The price declined from 1650 to 1400 to 1500. What happened next was both surged together. Volatility spiked to 88 and the price rallied from 1500 to 2100. So this was 2023, January, March. So if we look back at the chart, we can identify 2023 and obviously this sort of correction here, which we saw from January to March, which was pretty much a decline from like 1700 to around 1300. Then we saw a major spike rally up from there. So that's the first instance. So why don't we circle this instance here? It's not, it's an interesting comparison. I would say we can look back also in the chart to see um, January 23 here. So this was the when we went down and then we spiked in volatility. Okay, so we spiked in volatility. So that's the first instance that Claude is telling us that this happened, that we can see happen on the chart. The second period, late 2023, September to October, volatility compressed 75 to 62, price consolidated to 1600, 1700. Next, we had a massive volatility explosion. Price rocketed from 1700 to 4000. So late 2023, if we look at the chart, we can see that, in this area here, we had a price decline here. So that really to me was from about April 23 to around October 23. So we can basically see in 2023 from April to around October, we had this massive volatility decline and then a massive volatility spike, which resulted in a big rally up. Okay. So that's the second time. So we have the first time, the second time. Now there's two more times. Okay. So we can see the third time is mid 2024. So let's just look at that straight away. Mid 2024 was around this time here. Okay. So obviously, mid 2024, then in October 2024, did we have a volatility spike? Let's see. So what happened next? Both rose in volatility. So let's just see where the volatility was at in October of 2024. Sorry, that's the wrong chart. Okay, so October of 2024, we can see that volatility throughout 2024 was really being compressed and coming down. Then we see in November it starts to pick up, and then it really spiked in January 2025. So we have another instance here of this same situation, essentially. Um, so November of 2024, we then spiked up, and you don't want to spike too much. So, when it spiked up in January 2025, that was sort of the sign of like a top, right? So, um, so yeah, so we have that um, there. And then we have another time, which was the fourth time, um, which we have for late, so September, October of 2024. We kind of just looked at that as well. Um, but the price moved from 2,700. So it was September, October of 2024. Um, we sort of looked at that here, but price was kind of consolidating in this range here as volatility was coming down. So October, September 2024. Obviously, we looked at that here. This is sort of this volatility compression um, as price was consolidating, but we then had a major spike in price, obviously here from that volatility compression. And so, what do we have now? We definitely have volatility coming down. So, since November 17th, it's gone from 83 to 65 in volatility. So that's been a compression. And we've also had um, from basically here to here is this kind of volatility compression. So every single time that this has happened, Ethereum has gone up after that. Um, there's so many other factors that we could get into, and maybe I will get into some of those that are really not based as much on the chart, but more based on the macro fundamentals that are coming in. So what I will say is another thing we can look at is the dollar. So the dollar, usually when the dollar is in a bearish trend and it's going down, it is essentially good for crypto because that means liquidity is coming into the system. We also have rates that are coming down as well. Um, so if we just take these drawings off, you can definitely see that rates have been coming down for a long time, really since beginning of 2025. This doesn't necessarily, but rates have kind of like gone sideways, right? But we're entering into an environment which is going to be quad one. So if we look at the Hedgeye Bitcoin trend tracker, which I've showed you guys before, hopefully you've followed, the channel. I try to bring this up, especially in key times when things are shifting from bearish to bullish. Right now, we are still bearish, but we are making basically when it says buy on the bottom, you want the bottom end of the range to be higher than the bottom that it has put in recently. So it's showing higher lows in the risk range product at the bottom end of the range. And it's really just consolidating in this volatility compression, right? So we have a total volatility compression. On Bitcoin, we can see essentially um, that this is also happening. We can see the Bitcoin volatility is also being compressed. And I'm sure that this is also the case with Bitcoin that, when we've had these sort of long consolidations, um, volatility compression and then volatility expansion, which will, and I could ask Claude that same thing probably with Bitcoin, but I'm not as interested in Bitcoin personally. Um, as I am with Ethereum. So um, essentially, the hedge eye process. So we're going into quad one, which is really Goldilocks environment, where inflation's coming down. Um, we have growth going up, and stocks doing well, small caps doing well. Liquidity is abundant. The Fed is cutting rates. They're doing QE, and it's still not causing inflation. Um, in the short run, that's what they're going to do. So they're, in the next maybe 6 months, we're probably going to see a lot of cutting by the Fed. But what we can see is that in a quad one environment, if you stick with me here, I can show you the statistics here. With Bitcoin, we have an average return in a quad one environment of around 61%. Um, so, well, the expected value essentially is 102% actually return. The percent positive ratio is around 61%. So 61% of the time, we have this result. With ETH, in quad one, we have a 66% positive ratio with around an 81% return. So better return, or not better return than Bitcoin technically on a quad one basis, but a better positive ratio. Now, here's the big part too. The best quad for altcoins is quad one. So obviously it's not as consistent because it has only a 44% positive ratio, but the expected value gained can be around 87%. So we have that as a factor as well. If we look at equities, we obviously see that we have recovered and we're making all-time highs, I think today, um, looks like. So we're making all-time highs. I do think that this is a very similar chart to the essentially 2020 recovery from the tariff crash. And that's kind of been my thesis, is that we're in 2020 and that actually 2021 is next year. So that's why crypto, I think, will do so well next year, especially going into this quad one environment, um, with a lot of political catalysts that could also come from it. But essentially, this is what happened after COVID. And then we topped, obviously, down the road. I don't think I'm not saying it would be exactly that. I think this could also kind of all occur within the next year or so, where it's kind of like topping in um, maybe like August, July, June of next year, somewhere around that time frame. Because I think the midterms could get ugly and that could be bad, and who knows what could happen. So, same thing with the NASDAQ. Essentially, we see that we had a double bottom put in here, and now we're kind of popping up our head up to really kind of show that we're about to make new all-time highs. Obviously, the Russell recently made an all-time high. Now it's kind of consolidating. We have volatility, which is at a multi-year low almost. I would say it's the lowest since December of 2024. So that's good for, markets. They're sort of in this consolidation mode before kind of, I think, this big expansion that we could see in the first quarter and the second quarter. Um, this is the NASDAQ volatility, same thing. And then we have the Russell volatility as well, down a lot. And then obviously this is also good for gold and silver. Silver is just mooning at this point. So it's possible that we have a short-term top and we consolidate around $50 again. We'll see if we can even get back down to 50. I actually don't think we will. We also have gold making new all-time highs, of course. And so this will, I think, continue. And I think that crypto will follow it, essentially. Um, so those are some things to watch out for. Hopefully you got something out of the video today. I did quickly also want to comment on just the sentiment of the crypto market. So the sentiment right now is so bad. I don't think I've ever seen it this bad. And we're going into, so when you have sentiment super, super bad, and we're going into an easy environment financially, and volatility is being compressed, there could be a huge gamma squeeze because we have also a lot of the OGs who have not sold their Bitcoin, but they've actually used a sort of derivative strategy to hedge their downside and also hedge their upside. So when the price goes up, this causes them, the people who they've given their Bitcoin to do this strategy, um, which according to Bitwise is actually become more popular in the past maybe 6 months among Bitcoiners to really hedge their downside, but also hedge their upside. Um, so they kind of are just like, I just want to stay in this range. And so this volatility and range compression is really taking place, and it's been taking place for the past like 6 months. I think that a lot of these people are going to be caught off guard. I could name so many people now that I'm seeing on podcasts that I follow. Benjamin Cowan, Santi. You have Luke Groman selling his Bitcoin. You have just so many. I couldn't, the guy, the expert guy they have on Bankless who comes in and says, I think this is going to be a regular sort of four-year cycle bear market. So many people are off sides, and it's a huge issue, actually. And I think that this is sort of what we said would happen. And it's interesting because a lot of people said the OGs are going to sell because they think the four-year cycle is a thing. Then you're going to have um, the institutions buy that dip, and then we're going to keep going, almost like a super cycle, right? So in a way, this past year was kind of a bear market. You had ETH with like a massive bear market rally that actually went to all-time highs. You could think of it as a bear market, and it's actually just went sideways essentially. So that's kind of a bullish sign also when you think about it. So there's a lot of assets that have to be bought. I also like Aave. I know that there's been some controversy around it. I think that that controversy is actually sort of FUD. Um, you have the founder of Aave, Stani, buying tons of Aave the past couple weeks with this dip. And so I think, if anyone is going to vote, to give more revenue to the protocol and to the token holders, it would probably be the person who owns the protocol, doesn't own it, but created it, is the CTO or CEO or whatever you want to call him, the founder, and he's buying tons of Aave. So um, there's all these like little arguments within crypto that like, oh, we're not valuing it correctly and all of this stuff. It's so toxic. I think it sets up for a perfect situation for at least a short squeeze. I'm not saying technically that we're going to make an all-time high, but from these levels, you could easily see Bitcoin at 110. You could easily see ETH at 4,000, right? So we're talking about like a 33% rally or something like that. That's kind of baked in the cake, in my opinion, for the next quarter. You also have tax loss selling. Um, you have, with people right now, low liquidity, not low liquidity, but low volatility environment. People are just like, I'm taking off. I'm not looking at this market until, January 5th, which is that Monday, that we kind of get back to normal. So I would sort of look at volatility. If volatility starts to spike to like 70 for Ethereum, that's when you know that it could be bottoming and actually could be going up from there. I would expect this to start going up and to go to bullish trend, which I'll update you on for the hedge eye process. ETH has been like in this neutral trend, and it's kind of been bullish, it's been neutral, it's been bearish, it's been neutral, it's been, it's going back and forth. It's just so low volatility. But Keith is really smart, and I think he's sort of calling the Bitcoin and ETH bottom without explicitly saying it. He basically is calling it a bottoming process, and he is attempting to call the bottom on ETH. And so for him to do that, he never does that type of thing. So I think he's confident that this is going to be a good quarter for, and maybe 2 quarters for crypto, especially in the low inflation environment. You have quantitative easing, you have cutting of rates, and you have potentially a regulatory environment, which is coming in with the Clarity Act and the market structure bill, probably in the next 6 months. Um, So, theoretically, you also have a new Federal Reserve chair coming in. I think what's going to happen is they're going to cut rates all the way up until the Fed chair. Then that Fed chair, to save his credibility, is actually not going to keep cutting. And that actually will be the top. That's kind of my sense of what could happen. Um, that actually we top when the easy Fed chair is actually put in place. And this is probably around the time that crypto is also getting these regulatory favors. So I think crypto will go up without the regulatory favors, and then it will sort of consolidate above all, near all-time highs. Then we get the regulatory favor. That could sort of be where you look at the first instance of a top, um, potentially. So there are a lot of catalysts that also could take place, especially with Ethereum. Obviously, JP Morgan just put some money markets on chain. There's all of these types of catalysts that I think people are just not pricing in right now. Essentially, nothing is priced in. Um, you could say all the bearish sentiment at this point is priced in. The volatility is low. It's not going to crash in a crazy way with volatility this low. It's obvious that we're sort of in a bottoming process, because of this volatility compression. And we've seen what it has done in previous instances. So I appreciate you watching. If you like the video, if you want more content about, all of these things, risk ranges, etc., that I'm going to be posting, please subscribe to the channel, like the video, and I'll see you next time.